Hello and welcome to each and everybody for the first ever masterclass of concept education. Guys, am I audible? Please let me know whether I am audible. Good evening, Rahul. Good evening, Yamini. Good evening, Nandini. Good evening, Shivani. Am I audible, sir? I think I'm audible. Is this perfect? Are you able to listen to me? Audible. Okay, perfect. Good. Thank you so much, guys. Thank you so much, guys, to be a part of the first ever concept education's workshop. And these workshops I've made from my full heart, full blood, and full sweat, guys. I've put everything possible into these workshops, and you'll also look into it. And very honestly, these workshops are going to be very purposeful for you as well. So you might be asking, what is a workshop? What is the purpose of this workshop? And why is it different than any other classroom that is there? So I'll tell you guys, in workshops, all we are going to do is pick an important chapter out from your syllabus. We'll pick one important chapter out from your syllabus and we'll study it completely. And when I say we'll study it completely, that means that we'll go through all the concepts of that chapter, all 100% coverage of that chapter, and we will try to finish up almost all the questions that are there in the study material from that particular chapter. In bonus, we'll also include a lot of RTP, MTP, and PYP questions. So the idea here is that out of the syllabus, there are many chapters which are very important category chapter. And the idea here is that one by one, let's finish up all these very important chapters or very important category chapters. So what happens is, like, if you look at your FM syllabus, there will be around 10 chapters or 12 chapters or 15 chapters, as many as you want to break it into. But all of these chapters, when you look into them, there are few chapters that you can consider as very important or benchmark category chapters from where definitely questions come from the exam. So the idea is that through these master classes, we are one by one going to master all of those chapters. And I have a very hard belief in my heart also, guys. Before we start, I have a very hard belief at my heart. And that is, guys, that no matter how good the teacher, I have this feeling, no matter how good the teacher, how good the class, you will only pass the examinations when you do the questions independently. No matter how good the classroom, no matter how good the teacher, you only pass when you can do a question independently. That's the difference between anybody and everybody who has passed the examinations and who is below the line. This component of self-study is being valued very much at concept education and even at my heart. And that's why, to provide you as a self-study tool, we are launching concept education's smart practice, guys. So this smart practice, when you practice on our platform, you will be able to analyze. When you practice each and every question, we analyze that how much time you took to do a question. Did you do it correctly? Till what depth or till what step were you able to do it correctly? And accordingly, figure out your strength and weaknesses of that particular question and that particular chapter. Once you have done that, we call it the initial assessment basically. So once you have done that initial assessment, we try to give you magical recommendations so that your revision becomes much more effective. And if we at all find that, okay, this guy has the caliber to get an AIR, this girl has the caliber to get an AIR from their first initial practice assessment, we then realize this person is special, he is having the ability, is having the knowledge. Let's give them a library where there are more and more tougher and tougher questions or rank level questions, what I call it. So these questions will then help you evolve into a better student. So right now we are going to be launching the beta version of this, and I will be showing that beta version to you probably in tomorrow's masterclass or day after tomorrow's masterclass. But this is what masterclass is. This is what we mean by practice, and I'm very glad to launch the smart practice. And in masterclass, all we are going to be doing is one by one taking up all the important chapters, and let's finish off all of these chapters. So guys, just before we start this chapter, please, I want to make sure that everybody who's attending this stream, please make sure that you like this stream. So please take a second and make sure that you are liking this stream. And as soon as you have done that, let's start this chapter. And this chapter is the most important chapter from FM, one of the most important chapters I consider from FM, and that is called as capital budgeting, or it can also be called as investment decisions. I hope I'm completely, you guys are with me upon this. And chalo. So let's start this chapter. The first chapter ever that we are going to be doing as a part of our masterclass is called as capital budgeting, investment decision. So why the need of this chapter? So as you can see me, before I was a teacher, as you can see me here, before I was a teacher, I was a very, very big company's financial manager. And when I was a very, very big company's financial manager, I basically had 3 roles as my finance manager of the company. The first role that I had was getting the finance, which is called as financing decisions. Now, it may sound easy, but it is not as easy. What do we mean by financing decision is that every company's financial manager has to decide, okay, how do I get the money? What are the sources of money that are available to me? So the first source of available money is equity. The second source of money available is preference. The third source of money available is debentures. The fourth source of money available is loan. And then loan can have multiple types of loan. Secured loan, unsecured loan, loan at 12%, loan from a different bank at 10%. So as a financial manager, the role number 1 or step number 1 that we have is source the funds. And it's not like a very easy answer. Okay, I will source the complete funds from equity, or I will source the complete funds from preference. The answer lies here in a combination, or the answer lies here in a mix. That you have to understand, okay, it's not going to be only equity, it's not going to be only preference. Supposing if I have to raise 100 rupees, it has to be a nice mixture of all of the different types of fund. It has to be a nice mixture of all of the different types of fund. And why not equity, why not preference? This we will study in a different chapter of FM, which may be called as cost of capital. As you might have been seeing in your index, there is a chapter called as cost of capital. So, okay, right now I want everybody to just comment and let me know, have you started FM or not? Have you started FM, or is this your first ever lecture of FM? Or have you started a little bit studying of FM and you kind of know what FM is? Have you ever started? And if anybody has already done this chapter also, please let me know that, yeah, I have done this chapter. Jalaluddin, yes, started. Aishwarya, hi sir. Hi Aishwarya. Thank you for joining under the live stream. So guys, please let me know whether, hi Aishwarya, hi. I got your comment. Hi Aishwarya. Okay, yes, done this chapter. Okay, good evening. Ruchika ma'am, sir, I have done this chapter in 2008. You have not only done this chapter, ma'am, you have mastered this chapter. You're an All India ranker. Shivani, no. Phoenix, good evening, sir. Good evening, Phoenix. Started kiya hai. Okay. By the way, guys, these lectures are in English. But if kabhi bhi nahi samajh mein aata hai, to turant mere ko bata dena. In the comment, I'll make sure that I'll repeat that part in Hindi. Okay. Lakshmi, good evening. Good evening, Lakshmi. Perfect. So seems like not many people have started FM, and seems like not many people are commenting. So the first of all I want everybody was, please make sure that if you're a part of this lecture, that you have to be participant of this lecture, not just be a part of this lecture. So make sure when I ask you something, please reply. Yes, Jalaluddin, English. I will make sure it is in English, but I just wanted to let everybody know that just because of language, if you are not able to understand some one point, you can ask me that. Gyan Gamer, Gyan, good evening. We have so many gamers with us. Phoenix Gaming, Gyan Gamer, Venom plays. I'm not sure. Venom is not there today. Maybe. But fine. Okay. Good enough. So this part of, if I have to get my fund, the source of the fund, this part depends upon a completely different FM chapter, which is called as cost of capital. And once we go and do this cost of capital as a chapter, good evening, Hit. Once we go and do this chapter cost of capital, which will also become a part of our master classes, we will realize that, okay, it's not very, very simple. Okay, if we want to start a business, let's say we need 1 crore rupees, let's get 1 crore rupees as equity. It's not as easy as that. you will find out in the chapter cost of capital. So let's assume that part is done. Let's assume that part is done. Let's assume that the financial manager has already got the sources. Now what will company do with the source? Once you have the funds, the next logical step is to invest the funds. So that's why the next important role, the next important function of any financial manager is investment decision. Or we can say it as capital budgeting. The other name for investment decisions is called as capital budgeting. So once you have raised the money, once you have 1 crore rupees in your bank, the second thing is, okay, let's find a worthwhile project. Let's invest in this worthwhile project and let's make every money that we invest earn us a lot of money back. So that is the second step of any financial manager, or the second role of any financial manager. And the third role of any financial manager is, okay, once we have got the money, that is the sources of money has been done, we have invested the money, and once the returns from the investment has also come out, how much of this part should I share it with the shareholders, which is called as the dividend decisions. When we pay dividends, we pay back to the shareholders. So this is the third most important role of any financial manager. And fortunately enough, this complete chapter that we are doing, which is called as capital budgeting, in this complete chapter, we are going to look into detail about this second step, second function of a financial manager. That is, once the money is there, where can we invest it? And how can we make sure that every money or every penny that we invest gives us the best returns? Okay. So in a way, all we are going to be doing is looking into projects, finding out or evaluating projects, and then after that selecting one of the project and execute the project. So any capital budgeting decision involves going through 4 steps. One is generation of project. So once you have raised 1 crore, you then need somebody, or you then need some parameter to, let's say you that, hey, we have 7 projects with her, right? We have 7 projects with us. Out of these 7 projects, we can do multiple projects, we can do 1 project, but you need some system. You need some kind of recommendation that, hey, the 1 crore rupees we raised, we can invest that into these 7 projects. So the step 1 that you need to have is somebody or some robust system to give you projects, generation of projects, that what all projects do I have. The second step of capital budgeting is evaluation of the projects. Hi Karthik. The second step is evaluation of projects. So what do we mean by evaluation of projects? So as I said you, we have raised 1 crore, correct? We have raised 1 crore. Then we have also somehow generated that, okay, these are the 7 projects that we can do. These 7 projects can be done in combination or can be done alone also. But which one to do, we need to analyze. So we need to maybe study the project 1 in detail. We need to study project 2 in detail, 3 in detail, 4 in detail. All these projects, we need to study them in detail, or we need to evaluate all of them, right? So that is the second step, evaluation of the project. The third step comes down to selection of the best projects. So once you have done your evaluation and you kind of find out, okay, project 1, project 4, project 7 are not doable, don't give us good returns. So then you know, okay, let's go ahead with project 4, 2, 5 and 6, whichever ones are the ones giving you better returns. And the last step is the execution of the project. Now from academic point of view, we don't have to do any of these except for step number 2. All the questions in our book are not going to be related generation of a project, not going to be related execution of a project. All the questions that we have that are there in our study material, all the questions that are going to be there in the examinations are going to be from step number 2 and step number 3. That is, you have to evaluate a project on the basis of its merits and demerits, and you have to then select which one is better. And to be very honest, this is the golden part, evaluation of the project. Now, once you have already evaluated, okay, project number 5 gives you a return of, let's say, 1 lakh, and project number 6 give you a return of, let's say, 80,000. The magic is not deciding in let's go with 5 or let's go with 6. So the magic is not in selection of the project. The magic happens when you are evaluating the project. The magic happens when you find out or you assess, okay, what is the return of this project and what is the return of the other project. So everything is going to happen at the evaluation step. And in this chapter, if we have to learn one important skill, to go through this complete chapter, it is this skill, that evaluation of the projects. Correct? We have to kind of judge the projects on their merits. Now, before going into formal about this chapter, I would like to quote Albert Einstein here. And he had this world famous quote. I think you might have already read it. Please show of hands if you have already read it. Please leave a comment that yes, I have already read it. So the world famous Albert Einstein quote here was that if you judge a fish by its ability to climb a tree, it will throughout its life believe it was stupid, because a fish cannot climb a tree, right? So have you ever heard this one from Albert Einstein? If yes, please show of hands in the chat that yes, I have read this one, or I've heard this one, or I've understood this one, kind of a thing. So why am I quoting Albert Einstein here, and why specifically this particular thing is here? Why am I quoting this here, and why this particular thing here? So in the previous step, so wow, I didn't realize a lot of you have not actually heard it. But I do feel that even though you might not have heard it, I'm sure you would have understood it now. Correct? You might not have heard it, but I'm sure you would have 100% understood it correctly, right? If anybody here who says, oh sir, I couldn't understand that, please also show of hand that I was not able to understand it. I'm amazed that so many of you did not know this quote. But it's a very, very self-explanatory quote. Very well, Albert Einstein was saying that, you can't judge somebody's intelligence upon something that he doesn't have the ability to do. So basically, why this? Because Albert Einstein dropped out from a lot of classes. He believed a lot of subjects were stupid. So he dropped out from a lot of classes. And at the end, when people started believing, oh my God, Albert Einstein is one of the smartest brains or smartest person. But if you look at his classroom records, it was almost like he was a below par student, almost like a student who was failing in a lot of subjects. Correct? So that's where he quoted this, or that's where this quote came, that if you judge a fish by its ability to climb a tree, he said, other subjects don't even interest me. What interests me is basically science. Hi Hardik, I'm looking into your comment. Just give me a minute to reply to you. Taxation के लिए कोई अच्छी book हो तो बताओ. Hardik, I am the अच्छी book. Okay, you have to come at 9 o'clock and you have to be there with our taxation classes. I am the book. Right? Understood it easily, but didn't knew it was said by Albert Einstein. Perfect, Kazi. Perfect. So basically, Albert Einstein was kind of mocking everybody that, the school, the education system kind of judges you from certain ability and gives you a label, whether you are a rank holder student, whether you are a normal or an ordinary student, or you are a failure student. So Albert Einstein wanted to have a dig at them and say to them that, it's not always the student who is stupid. It's not always that the student who is stupid. It's most of the also times, Hardik, thank you for spamming taxation. I really like that you're spamming a comment, but I would really like to say you that taxation live happens at 9 o'clock. I think that is straight and clear. And please, if you want to study FM, here's FM, okay? I hope you got it, Hardik. Perfect? Okay. So, Albert Einstein wanted to make fun of the people who were judging a fish by its ability to climb a tree. And this is what happens. In fact, in FM as well. This is what is going to happen, in fact, in FM as well. And I'm going to prove it to you. That, I didn't just bring up this quote by coincidence. There is a lot of logic behind it. If anybody who knows that I am good teacher, you know how I stitch things up. If anybody who knows I'm a good teacher, you know how I stitch things up. Okay. So I have a question for you. And I want everybody of you to solve this question, right? Everybody of you to solve this question. I want everybody to answer in the chat. Please don't be a part of the lecture, be a participant of the lecture, okay? So Mr. A is considering a project. You are Mr. A, let's say for example, and you are considering a project. The details are that you have to buy a machine. The machine will be costing 1 lakh rupees. And the project returns are as follows. At the end of year 1, you will get a profit of 33,000. At the end of year 2, you will get a profit of 34,000. And at the end of year 3, you will get 35,000 back. Should you invest in the project? Everybody, I want you to take a minute. Answer. Should you invest? If you are saying yes, I want to invest, give the reason. If you are saying no, I don't want to invest, also give the reason. So give the answer, give the reason. Alright guys, 24 people watching. I need 24 of you to comment. In this particular scenario, if you were Mr. A, would you or would you not invest? And with the reason of the same. Everybody is requested to do that. So can we please create a poll for this? Okay. Okay, so we have answers from Yamini. Yamini says, yes, sir, because the investment is considered profitable. So I assume, Yamini, you have done this 33,000 plus 34,000 plus 35,000. And you might be saying that the profit after 3 years is going to be 1,02,000, while as the investment is going to be 1 lakh. So we net we are getting 2,000. So we should invest. I'm assuming, Yamini, that you did these calculations. Karthik, I think we need to find future value of present money invested. Karthik, I need an answer. Would you invest? Yes or no? And what is the reason if you would invest? And what is the reason if you would not invest? Don't give a question to my question, Karthik. Phoenix, should invest because 3 years our investment we get back. Okay. Aishwarya, yes, sir. Yes, because returns are good. I have a doubt. What is our expected rate of return? Ruchika, ma'am, having an unexpectedly higher level of doubt. Ma'am, please. Aishwarya, returns are good, so we are considering investment. Sir, we will get something by selling the machine at the end. No, Divya, you are not going to get any salvage value. Good question, Divya. You are not going to get any. Apple, my favorite student, Apple, Sharva, kahan the aap? Return don't match inflation. Apple, very good answer. So Apple says, no, I don't want to invest because returns don't match inflation. Rahul, yes, because returns are good. Good enough, guys. Good enough. What I wanted to prove is that here you are also judging a fish by its ability to climb a tree. Here you are also judging a fish by its ability to climb a tree. Why? Please listen me out and be patient. L.E. Lay, an interesting name. Please, Lay, can you give me your original name, boss? No, because if I simply invest in any other thing, it will get better results in 3 years. Okay. Wow, we have good answers. No, because it takes a lot of time to get a little bit of returns. Karthik, good. So, okay, fine. So, everybody who said yes can do the investment. Everybody, listen to me out very carefully, right? This is very, very important part. Everybody who says yes, we can invest. Yes, the 2,000 rupees is profitable. Yes, we should go for it. Everybody who's saying that is basically judging a fish by its ability to climb a tree. I know why you are giving this answer. Because till now we have mastered one subject. Till now we have mastered accounting. In accounting, we know the concepts of gross profit. We know the concept of net profit. And we also know the concept of net profit before taxes and net profit after taxes, right? So we know that if something makes sense in terms of net profit, we think all is good. So everybody who did this, that okay, the profits at the end of year 3 is going to be 1,02,000. The investment that I am making is 1 lakh. And yes, I am getting positive returns. Hence, I should invest. So here, what are you doing is you are judging an investment. You are judging an investment on the basis of accounting knowledge. You are judging an investment on the basis of accounting knowledge. And this is equivalent to judging a fish by its ability to climb a tree. This is equivalent to that. So in FM, when we are judging any project from financial management point of view, we cannot use our knowledge of accounting, or we only have to use very limited, very modified knowledge of accounting that we know. So it's not wrong that you gave the answers that, okay, nobody should feel, okay, I gave yes as an answer and it is a wrong answer. That's fine. Honestly, I am not about getting wrong answers or right answers. I'm getting about answers. So very good that you got the answer. At least you are trying to process this. And now you are going to be understanding, okay, I cannot judge any FM proposal. I cannot judge any investment proposal on the basis of accounting knowledge. Okay, sir. So if I cannot judge any investment proposal on the basis of on the basis of accounting knowledge, how should I judge any investment decision? So any investment decision that you need to judge, let me make sure. I think my iPad got stuck. Just give me a minute, guys. My iPad got stuck, okay? Guys, in the meantime, can you please let me know whether you are finding these classes comfortable, good, nice, or not? In the meantime, I'm just making sure that my iPad gets unfreezed. Just give me a minute. This always has to happen. Right? I have to connect my iPad back. Give me a 2 minute, okay? Give me 2 minutes. I'll connect my iPad back. So I hope you are enjoying the classes, right? The language is not a problem. For everybody who's is my language, my accent all good enough for you guys? Just wanted to know. All right, fine. Finally. Okay. Nice would be an understatement. Touche Abhishek, touche. Sir, थोड़ा हिंदी ऐड नहीं हो सकता. We'll make sure, Kazi. We'll make sure. But I think overall my accent is pretty neutral and it is pretty fine. So not at all a problem for you to understand. But if at all there is anything, I will make sure that I'll put in some things that is there. Okay, fine. So the point comes to that how should I judge any investment? So for FM, everything important is cash. It's almost said as that cash is king. While doing FM and on your FM book, I want you to do one thing, that open your FM book. On page number 1, I want you to write cash is king. Because I want you to remember this line very importantly, that FM values everything from only one eyes, and that is from the eyes of cash. Cash inflow, cash outflow. That's the most important thing to FM. And the timing of the cash as well. Right? So cash and the timing of the cash. These are the two most important things for FM. And FM looks into everything from this perspective only. It doesn't have any other perspective. So much so that FM accounts differ upon even depreciation. So much so that FM accounts differ upon depreciation as well. So if you know that depreciation is kind of an expenditure which is a non-cash expenditure, okay? But depreciation is considered as an expenditure in accounting. But depreciation is not at all considered as an expenditure for FM. FM doesn't even consider depreciation as an expenditure. So that is the difference, that everything needs to be looked into from only one eye, and that is the eye of the cash. And FM, to judge any project, in FM, all you have to do, or all you have to look into, is whether the cash flows make a meaningful sense or not, and cash discounted with time makes, because cash at different time of interval has different values to you as well. Alright, you have already gone through. Have you gone through at foundation? There was a chapter called as time value of money, right? So we have already gone through the chapter of time value of money in very, very detail, and we kind of understand that 1 rupee today and 1 rupee after a year is very different, right? 1 rupee today and 1 rupee after a year is very, very different. It cannot be considered same. And that is the principal mistake that happened when we just did this particular question. When we were just analyzing this particular question, we kind of realized, I'm lost my iPad again. Just hold on for a second. I don't know why this is happening today. Usually it doesn't happen that much. Maybe just maybe it is flickering a little bit. The internet is flickering a little bit. Okay, fine. Side. So what happened wrong in this particular assessment of yours was just this, that okay, you are spending ₹1 lakh today. You are spending ₹1 lakh today, and you are probably getting it back after year 1, year 2, and year 3. And if I even put a small amount of discount, let's say I put like a 5% discount each year on the money, then the answer would have been very different. The final discounted cash flow after taxes would have been well below ₹1 lakh. And all of you would have said, okay, this project is not worthwhile. And these were the few comments. A few of you said, yes, this cannot be done because if you consider inflation, that is a little bit of problem. A few of you said that I have a better opportunity with my money. So somebody thought, okay, let me just put this ₹1 lakh in a bank instead and get 7% return as an FD. That will still give me more returns. So the concept of opportunity cost, the concept of, money has different value at different time intervals. These are all the concepts that are very, very important to FM. And hence any FM proposal cannot be judged from accounting eyes. There has to be a different eyes to judge it, and that's where cash comes into the picture. We have to judge everything from cash point of view. Now, how does an ordinary question look like? So sir, does the discounting rate means the inflation rate? Yes, Dibya, the discounting rate means the inflation rate. But as and when you study, you will realize that different people have different inflation rates or different discounting rates depending upon their opportunities. So that we will study, and that is a part of another chapter which is called as cost of capital, where the percentages are very, very important, and we figure out how do we value our money 1 year down the line. How do we think the inflation is going to happen 2 years, 3 years down the line. So that is a part of a separate chapter. Okay. So now I want everybody of you to read this part. Now this is basically any other FM sum of this chapter, investment decision. Any other FM sum of this chapter, investment decision, is going to look like this. So it is going to have 3 parts to it. I'll read it with you. In order to modernize the manufacturing facility, a company wants to buy a new machine. The cost of the new machine is 10 lakh rupees. The installation charges is 1 lakh rupees. The life of the machine is around 5 years. Project returns year 1, year 2, year 3, year 4 and year 5. And as Dibya asked a little bit earlier, that will I get something out when I sell the machine? So in this question, yes, Dibya, you do get it. Also in the 5th year, the machine can be salvaged for a value of 50,000. So in the 5th year, I'm going to get this as profits, my normal profits that I do get. Plus, I am also going to get 50,000 at the end of the year. The applicable tax rate is 30%. Should I invest or not? So this is how any typical sum of investment decision is going to be looking like. And in this, you will see that there are 3 very, very clear parts to it. The first clear part to it is this part, where everything regarding the initial outlay of cash is given to you. This part is also called as initial investment by a lot of people. Okay, so there will be in any capital budgeting sum, there will be one part which will be dedicatedly explaining you what is the initial cash outflow. Then there will be another part which will be dedicatedly explaining you what is going to happen in subsequent years, as in what is the cash inflow and outflow in the subsequent years. And then there will be another third part. And the third part is what is going to happen at the terminal year, as in what are the cash inflows and outflows at the terminal year. The terminal year being the final year. So every investment decision question, it might be long, short, 2 pages long, 3 pages long, I don't care, 2 line, 3 line. In every capital budgeting question, you have to put your eyes out to find these 3 things. These are the 3 things which are very important to FM. These are the very 3 things that are very important for any investment, for you to judge whether the investment is going to be a favorable investment or a non-favorable investment for me. The first is initial outflow of the cash. You have to find this. The second is what happens in the subsequent years. Once I invest, what is happening in the subsequent years. And the third one is what is happening terminal year. What is happening in the terminal, that is the last and final year. This is the step 1 to any capital budgeting question. If you are able to do the step 1 properly, then comes step 2, which is the capital budgeting techniques. So for example, as we all did this question, right? For example, if we had to do it from FMIs, from the cash, we have to break this into 3 parts. Part number 1 is going to be initial investment. Part number 2 is going to be subsequent, what is going to be happening in the subsequent years for cash in and out, subsequent cash flows, that is as we call it. And the third we have to call it as terminal cash flows. So once you have done these 3 assessments, after that you have to apply some capital budgeting technique. This is not the answer, mind you very well. This is not the answer, okay? Once you do these 3 steps, after these 3 steps, you have to apply. With these 3 steps becomes the raw material for the next step basically. So these 3 steps, once you do, they become your raw material for various capital budgeting techniques. There are many capital budgeting techniques. And once you put these things into those capital budgeting technique then gives you the answer whether favorable to do. Okay, whether this is favorable or unfavorable to do. So at the moment we are going to be focusing very hard on, okay, let's find out these 3 techniques, because these are the raw materials for each and every question of any capital budgeting question. Okay, so what is the initial cash outflow? So out of the 3, let's start looking at the first one. The first one is initial cash outflow. Let's start looking at the initial cash outflow. So the initial cash outflow is basically a summation of all of these. First thing that is going to come is cost of the asset is going to be coming. Then you have to add any installation expenses that you are incurring, any transportation cost or any other cost that you have incurred to get that equipment in up and running state. Okay, any other cost that you have incurred to get that machine or equipment or that piece of asset up and running. Up till here, have you ever studied something like this? Has anybody, can you make a connection between this and something else that you have already studied in your 11th, in your 12th? Is there a connection that you have with this? Doesn't this look like depreciation, finding out the value of the asset? Janvi, it feels like inventory. Yes, it feels like inventory, Janvi, also very good. Because in inventory, all you had to do was you had to find out that what is the landed cost of material to you. So yes, it does. Dibya, capital expenditures. Jalaluddin says GST ke liye, exactly. Yes, very good. So all of these are links to that. Also, I remember very simple chapter that we studied in 11th and 12th was called as depreciation. And in the depreciation chapter, the first step was to find out the value of the asset. And the value of the asset is going to be nothing but asset plus installation charges plus transportation charges plus other incidental costs that were there to be incurred. Okay, so up till here it is kind of similar. Now there are lot of nice things that keeps on adding to find out the initial cash outflow. The first thing that you have to reduce, salvage value of any old asset if there is any. So for example, the company currently is working with machine number 1. The company feels that the machine number 1 is now an old model and it has less efficiency. The company thinks, okay, a new machine has come into the market, machine 2. The machine 2 is a new model and has better efficiency. And the company is thinking, okay, let us replace the old machine with the new machine. So let's say if the new machine costs 10 lakh rupees and the old machine can be sold for, let's say, 50,000 rupees. In the eyes of FM, when we have to calculate initial outflow, it is going to be, okay, what is the cash that is going out? 10 lakhs as the cash that is going out and 50,000 is the cash that is coming in. So the initial cash outflow is going to be 9,50,000. FM will value this machine as 9,50,000 in a way that if I accept this project, 9,50,000 I have to recover out of this project, not 10 lakhs. Very interesting. Please listen to this again. A machine costs 10 lakh rupees. Now ordinarily anybody thinks, okay, I want to buy this machine. Will think, okay, once I buy this machine, I'm going to invest 10 lakh rupees. And if I invest 10 lakh rupees, in return, I should get 10 lakh plus, more than this amount. Right? This is what everybody of us thinks. But because why do we think it this way? Because we are trained to think from accounting point of view. And accounts kind of tells you, okay, depreciation purpose, one machine, you beat that machine. And you get the profits from beating that machine. But that's not true from FM point of view. For FM, cash is king. And cash at different times have to be given different respects. So in FM, what it says is, okay, fine, you are buying a new machine. The cost of the new machine is 10 lakh. But on the same day, if you buy this machine, you can also sell a machine. And you can sell a machine for, let's say, 50,000. So in a way, today what is the cash outflow that is happening? You are going on for 10 lakh rupees, but you are also going to get back 50,000 rupees. So the cash that is actually going to go out is only going to be 9,50,000 rupees. So now for FM to accept or reject this project, the benchmark number is, am I getting 9,50,000 rupees from the returns of this project? This is the benchmark number, not the value of the machine. Are you able to understand this? When I learnt it as a student for the first time, I was fascinated that if a machine is costing 10 lakh rupees, I don't have to beat 10 lakh to say, oh, I'm positive in returns. I have to beat 950, not 10 lakh. Right? So this is what FM teaches you, that you have to value each project on its merit. You have to value cash, and that is how you have to do it. So at this point, let's start understanding this whole cash outflow by taking small micro sums, which I'll help you to build your basics, right? So let's do one small micro sum at the moment out of this. So I want everybody of you to give the answer to the question number 1. This is question number 1. Let's see who finds out the answer fastest and the most correct answer. You have to find the value of initial cash outflow. Come on, everybody has to solve it and put a comment as an answer. 15 guys watching, each and every one of you have to put it an answer. Don't be a part of the class, be a participant in the class. You don't have to look into case A right now, just this part. Dibya 16 lakhs, Jalaluddin 30 lakhs, Heth 16, Aishwarya 16, Raghav 30, Nandani 30, Karthik 30. Good, good. Fine. Let's see what the answer is. The answer is 30 lakhs. I'm not sure how did you get 16 lakhs, guys, but I'll just give my calculation for 30 lakhs and it should be the same for you as well. Rahul 30, perfect, very good. Yamini 30 lakhs, perfect, that is the answer. So guys, see, the price of the machine is 25 lakhs and the supply provides you a 20% trade discount, right? So what is going to be the value? 25 lakhs is the list price, and if I reduce the trade discount, which is nothing but equals to 20%, it comes down to 20 lakhs. Okay, 5 lakhs is going to be the trade discount. So 20 lakhs is going to be what? 20 lakh rupees is going to be the cost of the machine that I am going to pay to the supplier. Once the supplier thing is done, there is a transportation cost and there is also an installation cost. And the transportation cost is around 3 lakhs. The installation cost is around 7 lakhs. So total 30 lakhs of cash I'm going to be spending. Total 30 lakhs of cash I'm going to be spending. For what? For acquiring this machine into a state where it starts working. I hope everybody got to know why the answer is 30, and everybody was answering 16. I'm not sure why are you giving 16 as an answer, boss. Right? If there is a calculation, if you want to give me a counter argument, please make sure that you type that counter argument. But I hope you got this. Okay, you got my mistake. Apple, very good, 30. Perfect. So see, what part of our knowledge was used? That yes, cost of the asset, installation, transportation, any other cost incidental to the that we need to make sure. Okay. Okay. If you are able to get the answer 1 correctly, let's now do case 1 of it as well. Let's now try case 1 of it as well. I'll just show it to you once. Okay. So case 1, find out the answer for case 1 as well. Anybody and everybody who gets the answer correct for case 1 will be a person who is completely out of accounts and into FM now. If you are able to give the answer of case 1 correct, case A correctly, then very good that you are out of accounts and you are into FM and you will be doing FM nicely. So I'm getting answers from Phoenix 31 lakh 25,000, Rahul 27 lakhs, Raghav 27 lakhs, Nandini 3125, Jalaluddin 2625. 2625. Varied answers, varied answers. I'll wait for a minute or two for others to answer as well. Yamini, what's your answer? Karthik, what's your answer? Heth, what's your answer? Understand, cash is king. For FM, cash is king. Yamini 27. Guys, please make sure that you do inform your friends about this. And if you have friends across India, please make sure, if you are a part of any Telegram group, guys, please make sure that you can put this link itself, this YouTube video link, you can put it there itself in the Telegram. Please make sure that you share it with others. I really need your help, guys, to grow it. And I've been doing it in English for you, doing it in Hindi for you. So please make sure that you help me grow. Aishwarya 2760. All right, guys. All right. So let's see what the correct answer is. The correct answer is 27. So Rahul, well done. Raghav, well done. Yamini, well done. Janvi, well done. Janvi, I'm very happy that you are attending this class. And Janvi, I'm very happy that you are getting the answers correct as well. I'm very happy for that. So let's look into where could you have gone wrong. I'll just do these questions for you. So remember, the cost of the machine is 25 lakhs. There is a trade discount of say 20%, which is nothing but equals to 5 lakhs. So the cost comes down to 20 lakhs. And now it says that suppose the supplier is also offering a 15% cash discount if the payment is made upfront, and the company decides to do so. So the company is also going to make the payment. And we know how cash discounts work, right? If you give the payment, very good Apple, if you give the payment, the company gives the discount. So let's say 15% discount we are going to be getting, right? 15% cash discount we are going to be getting on the value of the machine. See, who is providing the discount? The supplier is providing the discount. So it will be on the value of the product. So that is 20 lakhs minus 15%, and that is come down to 3 lakhs is going to be the cash discount. So this is going to come down to 17 lakhs. Now once this is 17 lakhs, after that all we have to do is we have to add the installation charges, which is 3 something, and we have to add the transportation charges, which is 7 something, and this comes down to 27 lakhs. I hope everybody got 27 lakhs or got the reasoning why the answer is 27 lakhs and not 2625 or 3125. Perfect. Karthik, you got your mistake. That's it. That's what's required, boss. That's what's required. Not being wrong is not an option. You, some or the other, even the smartest of the minds, except for me, is going to give it wrong some or the other day. Right? Guys, how do you like the new intro? How do you like the new intro? Did you check out the new intro? Like 90 seconds का जो timer था, the starting वाला part. No, Phoenix, you get a trade discount as well as you get the cash discount. Okay. Suppose if he's also offering, okay, if you considered that he does not get a trade discount and only the cash discount is another ball game. I understand. I hope, guys, you loved the new setup. It was awesome. I looked at it. There is a guy called as Akarsh. Okay, he's one of my favorite guys that I've met in this year, and he does all of that. Believe it or not, guys, Akarsh was a CS student. So he was our CS student, and then he somehow decided, okay, let me get into graphic designing and artist and all that. So somehow he approached me regarding that. And he does superb work for us, guys. He does superb work for us. I truly love all of his work. Even this all designing, the Masterclass, FM Capital Budgeting, this all designing is done by him for us. It's amazing. It's amazing what that guy can do. So this is 27 lakhs. And as the profit is here, we can all see. So anybody who got it correct, right? You would have noticed we would have never done this. We would have never done this at the time of accounts. At the time of accounts, we never reduce the cash discount from the price of the asset. We always keep it separate than the price of the asset. The price of the asset is different. In accounts, we would have done this entry as asset account debit without the cash discount. And we would have said to bank and to discount, whatever, because discount is a separate earning to us. So we would have said to discount 3 lakhs, to bank 24 lakhs, and to the asset 27 lakhs, something like that. Or maybe a lakh or here, there or not. But this is how we would have done it in accounts. We would have recognized the discount. But FM doesn't recognize discount. FM doesn't understand. It says, okay, cash is not going. That's it. That's fine. That's as far as I can think, and that's as far as I want to think. Nothing more or nothing less than this. Okay. Okay. Let's go forward with this particular question. Let's go forward. Or maybe let me just complete this part for you. So as we know, we are trying to learn how to calculate initial cash outflow. So to calculate initial cash outflow, we need one, cost of the asset, all the installation expenses will be added, all the transportation expenses, maybe insurance is there, you need to add any kind of expense to bring that asset into a working condition is to be added, right? All of this we very, very well know. Now, as I said you that if there is an old machine that is being replaced by a new machine, that the old machine's value, the salvage value that you get back can also be reduced. And that is the first thing that we reduce to find out the initial cash outflow, right? After that, we are going to be learning a superb concept called as tax saving or tax shield. Okay, so I'll explain this with the help of figures. Let's say we already have a machine 1, M1, and the balance sheet value, or as we can call it, the WDV value of machine 1. Machine 1 is a machine that we have purchased, let's say 3 years ago, 4 years ago, whatever. We purchased this machine years and years ago. This machine's value as of date is 50,000. That means whenever we purchase this, original cost minus depreciation year 1, depreciation year 2, depreciation till today gives me 50,000. Okay, so that's why I call it the balance sheet value of this machine is 50,000. The WDV of this machine is 50,000. That's what I call it. Okay. Now the company considers, oh, this machine is gotten old. It doesn't have better efficiency. There is a new machine in the market which can replace this. This is M2. This is a new machine, better efficiency, and we should go ahead and replace it. Okay. The new machine costs 10 lakh rupees. The new machine costs 10 lakh rupees. Now that we know that the machine 2 costs 10 lakh rupees and the machine 1's book value is 50,000. The machine 1 book value is 50,000. I realize that if I get the new machine, if I buy the machine 2, I don't need the machine 1 anymore. There is no need for me to have the machine 1. Okay. So what do I have to do? I'll sell the machine 1 because I don't need it. I'll sell it, I'll scrap it, whatever I do. Okay. But I don't need it, so I have to sell it any which ways. And let's say when I found out a second-hand market for it, the rate for the second-hand market for this particular machine was only 30,000. The rate for this machine was only 30,000. Currently, with this information only, I want you to calculate what is my initial cash outflow. Currently, with this information only, find out what is my initial cash outflow. Only with this information. $9,70,000. Any other answer? Rahul, 970. Jalaluddin, 10. Jalaluddin, why 10? Think about it. Aishwarya, 970K. To be honest, guys, 970K is the correct answer. What is the cash that I will be paying to buy machine 2? I will be paying 10 lakhs to buy machine 2. Because I am going to buy machine 2, I'll sell machine 1. When I sell machine 1, I get whatever the second hand market price for it is. I don't get the book value. I get what I can sell it for. So I can sell it for 30,000. So what is my initial cash outflow? 9,70,000 is my initial cash outflow. Now I put a small twist to this. One small twist. Now I put one small twist to this and I let you know that, hey, capital gain taxation is at 20%. Capital gain taxation is at 20%. Find me now initial cash outflow. Capital gain taxation rate is at 20%. Find me now what is my initial capital outflow. Very good, Karthik. Very good, Yamini. Very good, Nandini. Good going, guys. Chalo guys, come on. Everybody has to participate in the class. We are not going to be just a part of the class. We are going to be a participant of the class. Everybody needs to answer this. Everybody needs to answer. The more you answer, the more you develop a relationship with me as well. The more you answer, the more I know your name. The more when you WhatsApp me, I'll clear your doubt also. Okay. Nandini 970, Jalaluddin with a separate answer 964 this time. Janvi says same 970. Jalaluddin says okay, let me change by 2966, not 964. Apple 7, Phoenix 966, Rahul 976. Jalaluddin 4000 tax saving. So this is a very, very important concept, guys. I know this sounds very stupid, or this is not going to make any sense to you on day one. But trust me, this is very important. I know this is not going to make you good amount of, it won't make sense to you on day one listening to this. But trust me, this is going to make sense as and when you see it in real life. Okay. So what is happening is, let's revise. Okay. Day one, I have to buy the machine 2. So I have to pay somebody 10 lakhs. But I can sell the old machine. And I can get 30,000 by selling the old machine. And that's why I know most of you are saying, okay, 970 is the same answer as before. That is my initial cash outflow. But I want to dig deep here. What is happening is that this machine, the M2 machine, or the M1 machine that I have, not the M2, the M1 machine that I have. The M1 machine is having a book value of 50,000. What will happen if something with a book value of 50,000 is sold for 30,000? Will I have a profit or will I have a loss? If something is worth 50,000 in my books, and if I sell it at 30,000, what is going to happen? Am I going to incur a loss or am I going to incur a profit? Everybody needs to comment. Am I going to incur a loss? Very good, capital loss. Dibya, Karthik, loss. Okay, so loss is going to happen. We all know that. And the loss is by the amount of 20,000. We also know that. Okay. What is the tax percentage on capital gains? What is the tax percentage on capital gains? The tax percentage on capital gains is 20%. The tax rate on capital gains is 20%. Hold my thought. I know you are going to say, sir, capital gains, this is loss. So why are you applying it? Hold my thought. I know you are going to be thinking that. But for the moment, just be with the flow, be with me. That I know 20,000 is the loss. And the tax on capital gains is at 20%. So what is happening is, you are saving 4,000 rupees of tax. You are saving 4,000 rupees of tax. Why the 4,000? First, I'll show you that. 4,000 is nothing but amount of loss multiplied by capital gain rate. Amount of loss multiplied by capital gain rate. And 20,000 into 20% is nothing but equals to 4,000. And I'm saying this, that you are saving taxes of rupees 4,000. You are saving taxes of rupees 4,000. Why? I'll give you the rationale behind it. So anybody who's getting confused right now, don't bother. The rationale behind is that you don't know taxation. How taxation works in India. So suppose there was machine 1, which is this machine that we sell, and the loss on this machine is how much? The loss on this machine is 20,000. Suppose there was another machine, let's say machine 3. Machine 3 I actually sold, and I actually sold at a profit of 20,000. Machine 3 I actually sold, and I sold at a profit of 20,000. And at the moment, let's just keep them at 2 separate places, okay? Machine 3, I sold it at a profit of 20,000. Machine 1, I sold it at a loss of 20,000. We all know that capital gain is at 20%. And I know you are going to say, sir, tax should be on the gain. Where is the gain? Gain is on machine 3. So let's charge 20% tax here. And what will be 20% taxation amount if we calculate? So this is going to be 4,000 rupees as taxation. So for example, if I sell the machine 3 at 20,000 and profit, if I sell the machine 3 at a profit of 20,000, I have to pay taxes of 4,000, right? If I'm selling a machine at a profit of 20,000, 20,000 is not my profit. Understand? Out of this 20,000, I'll have to pay government 4,000 because that's how taxes are. And at the end of the day, I have to take 16,000 back home with me. So how much am I taking back home with me? I'm taking 16,000 back home with me. And if I look into M1 separately from M3, you are going to argue, and which is a very, very good argument, that sir, here there is a loss of 20,000. And nobody is allowed to tax losses. Nobody can collect a tax of rupees 4,000 on losses. And I do agree that. But here's how losses help you when you don't look them in separate and when you look at them in together. In India, it is allowed, as per the taxation rules, it is allowed to pay tax on the net gain that is there. You pay tax on the net gain that is there. And what is the net gain to me here? The net gain to me is here is 0. In machine 1, I had a loss of 20,000. In machine 3, I had a profit of 20,000. If I net them up, as in somebody asks me, what is your total gain? Net gain is nothing but my total gain. If net is a word that is troubling you, let's put in total gain here. If somebody asks you, what is your total gain? At the end of the day, you are going to answer, my total gain is 0. Because I earned 20,000 somewhere, but I lost 20,000 also somewhere. So my net gain is 0. And if my net gain is 0, can I pay taxes on it? No. No gain means no taxes. So now if I look at these two different cases, which is that if I looked into them differently, yes, I would have to pay 4,000 as tax. But because in India, I don't look at them separately. I look at them in combination of each other. I find out what is my total gain. I found out my net gain. My losses are to be allowed to be reduced from my profits. That 4,000 rupees of tax that I had to pay is no more that I had to pay. I don't have to pay it anymore. So a loss helps you. I want you to write down this also on the front page of your FM book, that loss helps you to cut your taxes. There are two things in life that is going to help you to cut your taxes. One is loss. The another is yes sir tax lectures. I know, very bad joke, but I had to do it. Okay na, dil mein joke aa gaya tha, or I felt ki I have to say this. If I don't say this, I'll be smiling throughout the class and you won't realize why am I smiling throughout the class. So once I realize a bad joke in my head, I have to then say it to you. So there are only two things that help you reduce your taxes. One of them is losses. The another one is me. So loss helps you to cut your taxes, to reduce your taxes. And if at all, are you able to grasp this concept that 4,000 rupees is saved just because you made a loss of 20,000? You saved this 4,000 just because you made a loss of 20,000 somewhere, right? If you are able to grasp your head around this concept, well and good. If you are not able to grasp this head around your concept, I'll give you one more example. Let us do one more example. So my claim is, or what I want to teach you is, loss helps you to cut your taxes. Well, let's take one small more example, because a few of you are saying yes, understood. So let's take one more small example. Okay, one more very, very small example where the amount doesn't come down to zero. I'll explain you one more time. Okay, so let's say again I had a machine 1, and machine 1 I have sold it at a loss of 20,000, and nobody can take taxes on my losses. So there is no tax here, right? No tax here because this is a loss of 20,000. I also have a machine 3, and I sold the machine 3 at a profit of, let's say I sold the machine 3 at a profit of 30,000. Now I do know that I have the audacity to say this, that nobody in India can take tax on a loss, but the other way is also right, that yes, as soon as you get a profit of 30,000, the government will be standing on your face asking for the tax. And how much is the tax rate? The tax rate is 20%. So the government is going to be asking you, hey, you earned a profit of 30,000. It is a capital profit. Capital gains are taxed at 20%. So give me tax. I'll say, okay, let me rework the amount of tax. And when I calculate the amount of tax, it is going to be nothing but 30,000 into 20%. And 30,000 into 20% is nothing but equals to 30,000 into 20% is nothing but equals to 6,000. So I do know I have to pay 6,000 as taxes. I have to pay 6,000 as taxes. Very good. I'm seeing already answers from you guys. I'm already seeing answers from Phoenix and Rahul and Aishwarya, and this is what I wanted to teach you. So had this netting of value not been there, had this loss not been there, you have to pay 6,000 as taxes. But because there is a loss, and because as per Indian income tax you can net this off, you have to pay not 6,000 rupees as taxes, but as calculated very correctly by you guys, you have to pay 2,000 as taxes. And how is this happening? So simple. Whatever the amount of loss, if you multiply that by the capital gain tax rate, whatever the amount of loss, if you multiply that by the amount of capital gain tax rate, you get your tax savings. Whatever the amount of loss, please note this, whatever the amount of loss, if you multiply that by the amount of capital gain tax rate, you get your tax savings. What was my loss? 20,000. What is the capital gain tax rate? 20%. 4,000 is my tax savings. And 2,000 is the tax that I have to pay. So this concept is very, very important. This concept is very, very important. Understanding this tax saving is very, very important. And accordingly, now that we understand, oh, 4,000 is tax saved. 4,000 is tax saved. Accordingly, we realize that, okay, that yes, there was a machine that we were trying to buy. The cost of the machine is 10 lakh rupees. So 10 lakh minus, I can sell the old machine at 30,000. So I get back 30,000, so 30,000 plus from cash point of view. This leaves me to 970 deficit or minus. But because I sold this at a loss, it has saved me 4,000 rupees of taxation. So my net cash outflow is 9,66,000. Let's see who got it. 9,66,000. I'll just scroll above in the chat to find out. Very good. Aishwarya got it 966. Phoenix got it 970 minus 4,000. Perfect. Karthik got it 976. Karthik, why 976? 966 beta. बहुत बढ़िया. Jalaluddin got it 966. Perfect. So I hope now everybody got it, right? Everybody got it कि why 966 is the correct answer. Sir, अगर directly 30,000 minus 20,000 into 20% किया तो भी चलेगा. Yes, Phoenix, that will do good. But honestly, when you are doing that, you are calculating this. जब आप वो करते हो ना तो आप 20,000 निकालते हो. ये 20,000 is the tax payable. And unfortunately एक बात बताऊँ, tax payable की कहीं कोई जगह ही नहीं है. हमको tax payable नहीं चाहिए. हमको यहाँ पर पता है क्या चाहिए? हमको ये चाहिए टैक्स सेविंग कितना है. क्योंकि देखो आपने इस सम के अंदर माइनस क्या करा, आपने टैक्स पेबल माइनस करा कि टैक्स सेविंग माइनस करा, टैक्स सेविंग माइनस करा. तो हमारे को टैक्स सेविंग चाहिए. आई होप I cleared Phoenix कि why we don't have to do that. In fact, आपने जो करा it's perfectly right, but we don't have to do that. Aishwarya once explained last calculation, but sir, there should be a capital gain to set off. Okay, Divya, very important question by Divya, or very important hypothesis by Divya, and that is, sir, I can understand that the 4,000 saving is there only when this 6,000 of tax is to be payable, or only when there was another machine M3 that I was paying the profits on. I hope, did everybody get Divya's question? I really want to make sure that you understood Divya's question. It is a very, very good question. He's kind of asking what Divya's question is, that sir, I do understand that you are saying 4,000 rupees is saved in taxation. Sir, I do understand you are saying 4,000 rupees is saved in taxation. But you are saying this on the basis of that there was a machine 3 which we sold on profits. If there was no machine 3, then that's what Divya's question is. If there was no machine, there was no profit, then where can you set off this? And how can you say 4,000 is your tax benefit? So here, while doing each and every question of FM, we have to consider this as an assumption that there is always some capital gain that we can reduce. While doing this, we have to take this as an assumption that there is always some capital gain that we are going to reduce. And hence, even if in the question specifically nothing is written by M3, we always have to imagine that there is another machinery which is being sold for a profit and where I can reduce this. Okay? I hope, Divya, I have answered you perfectly. Ki always this is an assumption that is considered in FM, that always we have to consider that there is another capital gain and that has to be set off. Okay? Okay, Aishwarya, I am not able to understand why, which calculation you want to understand. Can you tell me, Aishwarya, again? Janvi, sir, the 4,000 is an assumption only, right? Yes. See, the 4,000 is the tax saved. And you always have to take that as an assumption that whatever amount you are calculating on your loss, the same amount of profits you will be having. So you will be able to reduce that. And 4,000 will be always saved. You always have to take that assumption. I hope it is clear. Aishwarya, which calculation you want back? How we got 966? This is what you want back? This is how we got the 966. The one which is on the screen now, sir. Okay, so we bought the machine, Aishwarya, if you remember, M2, we bought it for 10 lakhs. M1, we sold it for 30,000. Okay, M2 we bought for 10 lakhs, M1 we sold for 30,000. The book value of M1 was 50,000. Because of that, there was a loss of 20,000. And we found out that because of the loss of 20,000, there is a 20% tax saving, and a 20% tax saving on 20,000 loss becomes 4,000, and here is that 4,000. Okay, I hope this is clear. If there is any other doubt, Aishwarya, you can please let me know that this is my doubt. Okay. Okay, perfect. What if I change this case? What if I change this case to another question to you? Slight changes in the question. Okay, very good, Aishwarya. Slight changes in the question, okay? Just one small minor change in the question. I am planning to buy M2. M2 ka cost 10 lakh rupees. If I buy M2, M1 has to be sold. The book value of M1 is 50,000. When I went into the second hand market and tried to find out that whether there is a market for it, I found out, I was surprised. People wanted this machine. And I realized that I can sell this machine for 80,000. Rahul will get to that also. I realized that I can sell M1 in the market for 80,000. The tax rate is 20%, please find out the initial capital employed. And anybody who gets the correct answer of this thing, anybody who gets the correct answer of this particular question, what is my initial cash outflow, he will win a cash prize, Paytm prize, Google Pay prize of 5,000. And this is Raghav 9,26,000. Janvi 10,96,000. Jalaluddin 9,26,000. Rahul 926. Aishwarya 914. Phoenix cash inflow from machine 1 is 74,000. No. Cash inflow from machine 1 is 80,000 beta. Oh, I think what you're doing. I don't need Phoenix cash inflow from machine 1. I need what is my initial cash outflow. Yamini 926. Chalo, let's calculate. So first thing is I am going to buy machine 2. If I buy machine 2, I have to pay 10 lakh rupees. So 10 lakh minus. Second thing is going to be happening that I'm going to be selling the machine 1. And if I sell machine 1, I get how much back? I get 80,000 back from the market. So I think my initial cash outlay is going to be 9,20,000. But because of this, there is one more problem that is coming, and that is as soon as I sell something worth 50,000 in my books at 80,000, as soon as I sell something worth 50,000 in my books at 80,000, there is a profit of 30,000. As soon as there is a profit of 30,000, somebody from the taxation authorities is going to be at my gate asking for the 20% of the tax. And what is the tax amount? So the tax amount is going to be 6,000. So the thing is that I think I will get 80,000 by selling machine 1. The thing is that I will get 80,000 by selling machine 1, but that's not actually happening. I am selling machine 1 at 80,000, but out of this 80,000, somebody is taking 6,000 and going on from the between. And that is nothing but our Indian taxation authorities. So what is happening is that I have to pay 6,000 again to somebody just because I sold a machine at 80,000, which is at a profit of 30,000. So this is my tax expense, and hence my total cash outflow is going to be 9,26,000 as predicted by most of you. So with this, guys, good work done. Yes, Janvi, correction 926. Good work done. Raghav was the first person to answer this 926. He's the first comment I saw. Raghav, very well done. You are getting 5,000 rupees as cash prize from today. The price of this 5,000 is being sponsored by Janvi. And Janvi, please make sure that you transfer 5,000 to Raghav. Janvi said me before class that, sir, whoever wins the question for the day, she wants to contribute 5,000. So thank you, Janvi. Everybody, please clap for Janvi. Please put a clap emoji for Janvi to be such kind-hearted. Alright, guys. So with this, I have to say that we have done good progress. In finding out initial cash outflow. We have done with the salvage value. We are done with the tax saving. But there is certain one big thing that we have to also encounter, and that will start tomorrow, and that is the block concept. Now this is something which is very tricky for you to understand right now if you have not learnt income tax section 32. That is the depreciation section. Because in income tax, depreciation works very, very differently than in accounting. So today we'll end this class here only. Tomorrow we'll resume this class. We'll do a few sums that I've kept ready for you as well. And after that, we will also do this block concept and finish off this initial cash outflow. So remember, this chapter is big. This chapter is important. But the three most essential elements for this chapter is nothing but understanding initial cash outflow, understanding subsequent cash outflow, and understanding terminal cash outflow. I know, Aishwarya, the time flies. It's been 1.5 hours that we have started this. I actually have another live at 9 o'clock. So I just want to do a little bit of preparation and eat food in between. And that's why 8 to 9 I've kept for myself. And I'll see you guys tomorrow, same time, 6:30. Guys, please make sure that you let your friends know about these classes. And please make sure that you also join tomorrow. And please make sure, guys, that after this video, after this live stream, I end this live stream, please make sure that you put a comment on this video. See, how YouTube works is YouTube understands that if a video is getting too many comments, then YouTube thinks it is really essential. And I know this is essential and this is worth it. Guys, today was the first day. It's been very hard or very different for me also to, ki hardcore Hindi banda, hardcore Desi banda from Gujarat or, from Rajasthan, Madu. It's been very hard for me also, or very different experience for me also, to have a completely English class. Rupesh, Jai Shri Ram. And it's been very different, guys. It's been very different, to be very honest. And to be honest, I was very apprehensive before the class was starting. Like before the classes were starting, I was very, very apprehensive that I've put this board out 100% English. In the last few days, you don't know, I have thought about changing this. But now as the first class has ended, guys, trust me, I think this was a very, very good move. Guys, trust me, I think this is a very, very good move. Not only for me as a faculty that, my video can be watched by all the people. But I think this is a very, very good move because everybody at the end of the day has to write the exams in the English language only. And you kind of have to improve this. There is no way out. Understand, once you are becoming a CA, there is no way out. Once you are becoming a CMA, there is no way out that you don't have mastery or fluency over this language. So I feel like हे તો આપણે પણ ગુજરાતી જ છીએ અહીંયાથી તો અહીંયાથી ગુજરાતી જ છું હેત પર શું કહું તમને હવે બરાબર but I feel like this has to be done and somebody has to be about, like some faculty has to come out and say, okay, I understand, we all understand Hindi, that's been our mother language, or any other language has been our mother language, but I do know that we are going to be transforming it. And Nandini, yes, slowly and steadily, because I've already started the salaries chapter. By the way, last 3 days of salaries chapter. But once salaries chapter get over, guys, I might even change the taxation to a lot more English than it is there right now. I know I'm going to be, whatever I do, guys, I do it in English, or I do it in English, or I do it in Hindi. Whatever I do, guys, I do know I'm going to make few people always sad. But I feel as a faculty, the most appropriate thing is at the end of the day, if you're giving your examinations in English, this has to come in English. Hate, I can understand hate. But we need to improve it. There is no way around it. This is not a foundation exam that akkad vakkad bombe bome finish ho jayega. This is something which is intermediate and you have to write it. Yes, sir, it will help a lot from you. Yes, Nandini, I am very, very happy. Guys, did you like the whole experience, the whole notes, everything? Please, guys, leave a feedback. Once the video ends, please leave a feedback. I personally read all of your comments, guys. So whenever you write after a video, very good classes, love today's session, I personally read them, guys. So please make sure that once I end this live, you put a feedback And also, if you have any other feedback, you always have my number. You know how to get to me. Please make sure that you send a message. Right? Nobody is putting in so much efforts to, do these kind of notes and be there and do so many sums. These all sums I've made it for you, so that you can understand the concept in and out and not just, kind of know the concept kind of thing. Karthik sir, please reply to my comment. Karthik, I'm kind of finding your comment, Karthik. Sir, how many days does it take to complete the FM syllabus? All the important chapters, Karthik, I can say around 30 days. All the important chapters around 30 days. Maybe less, maybe more, but around 30 days is a good mark for you to do all the important chapters. When is your exam, Karthik? Are you giving in September? Please let me know. Or you are giving in December? Please let me know. Or January, whenever it is. So that is it. Yes, Hit. Step by step. Everything will happen. Everything will happen step by step. Everybody in the starting is ordinary. Level 0 is the hardest. And then as you go up, Hit, everybody will be better. December, January. Perfect. You all have time, guys. You all have time. Nobody is giving in September, तो guys मैं देखो और अच्छे से पढ़ाता हूँ. If you are not giving in September, I'll make sure that I'll study, this studies happen much better and even more conceptual. So it gives me, kind of some security. If it was in September, I had to rush this to you. But it gives me some kind of security to do this nicely with you. So thank you, guys. Please, I'll take your leave now. I hope you loved today's session. Please, guys, forward it to as many friends that you have. If you are into any Telegram group, please make sure that you forward it there. Anybody you know who needs 100% English lectures, forward it to them. Anybody you know needs help in lectures, forward it to them. And please, guys, please make sure as soon as I end this video, please put a comment on YouTube so that it helps me grow on YouTube as well. Thank you, guys. I'll see you tomorrow sharp at 6:30. Bye-bye.